Welcome to Endgame Finance. Today guys, we're talking about Rivian. If Rivian has the potential to double in share price within the next 12 months, there's a pretty good case to be made that this stock is undervalued and it's possibly looking for a major breakout pretty soon. So let's look at some of the facts right now. One thing that really pops out is the short interest in Rivian has been steadily declining. Meanwhile, days to cover has been increasing. That basically means the stock is becoming less volatile. At the same time, there's less people betting that this stock is going down. I'm expecting this decline to continue going forward. There's one major reason why this is happening, and I believe this is because of VinFast, the recent EV from Vietnam that just IPO'd. That's pretty much skyrocketed in value, and that stock has become so massively overvalued that pretty much every single short in EV is jumping ship to short VinFast instead of shorting Rivian. Now, this is not an endorsement to short VinFast because VinFast shares outstanding are only 1%. 99% of this stock is still being held by just one person, so it's extremely easy to manipulate this stock in price movement. Basically, someone can just play tennis with the stock, sending it up and down with just a few $100 million just because there's such a limited amount of float. However, someone has already pushed it so far ahead that so many shorts are jumping in now. They're jumping ship away from Rivian and they're jumping to a short VinFast, which potentially will translate into less shorting activity on Rivian, and this will be extremely bullish for the stock. However, these are not the primary reasons the stock will double up most likely within the next 12 months. In the next 12 months, Rivian could potentially reach close to $10 billion in revenues. That's a 100% increase from this year. And if we assign value of the stock to Rivian at 5x revenues, we see this company reaching around $50 billion market cap. That's a little bit over 100% gain in stock. I believe this is extremely reasonable for high growth stocks to be valued 5x revenue. Just because they're growing so rapidly, it's very hard to measure the valuation by traditional measurements such as cash flows, because a lot of high growth stocks don't really have cash flows until they've grown, until they've developed into the future. Tesla had no cash flows for majority of its existence. They just started producing cash maybe within the last few years. And that stock has been consistently assigned 10x, sometimes even 20x revenues to their market cap. So using comparable valuations, we can easily see Rivian reaching $50 billion market cap once they actually hit these projected revenues of close to $10 billion next year. Because Rivian has started mass scale production, they have increased their guidance to over 60,000 vehicles that will be produced this year, and they will most likely double up to around 150,000 units next year, producing their own electric motor, which is making it a lot easier for them to mass produce. And they still have a huge demand for their vehicles, not just for ordinary consumers, but there's a huge commercial demand for their electric delivery vans from Amazon and everyone else that's just waiting for that exclusive agreement between Rivian and Amazon to end. And there's also a huge demand from utility companies and other businesses to use their R1T trucks. R1Ts can power tools, they can provide electricities at work sites. So there's going to be a huge demand for R1Ts just from the commercial, just from the business side. So better improved manufacturing practices with much higher demand just coming into next year will translate into $10 billion in revenues. We assign the 5x multiplier to these 10 billion, we get around $50 billion. So we get over 100% increase in stock price within a year. Analysts here are expecting $44 on the higher side within the next year. That's roughly around $50 billion market capitalization. So I'm in agreement with this higher end prediction for Rivian stock. The median is around $30, but I really do see Rivian hitting over $40 within 12 months. A lot of funds will still pour into this stock to position themselves for the future, because it's going to be illegal or outlawed to buy a traditional engine, to buy an ICE vehicle. Only corporations that manufacture EVs will survive, and those will be predominantly Tesla, and that will be Rivian. Now, people are still saying that a lot of these traditional ICE makers like General Motors and Ford will be there in the future. However, they're a huge mess right now with all the strikes going on, with all the protests from their employees about unfair treatments. So those guys have a lot of baggage, and a lot of funds will just look at that and just say, let's go to Rivian. Rivian is a brand new company. It hardly has any debt. It doesn't have any pension obligations. It doesn't have any union pressures. This company is just poised to perform in the future. So let's pour our money into this and position ourselves for this future where ICE combustion engines are illegal, where EVs are dominant, where everyone is buying EVs, especially with the new Rivian platform coming on within 2 years, where they will have a cheaper production SUV, which is the most desired vehicle in the Northern Americas. So everything is lining up for Rivian, and funds will see this. They already see it, but they're just cautiously buying now. So that is my thesis why Rivian will likely double in price within 1 year. This is not a promise, this is not a guarantee, this is just an estimate based on the factors that are currently being presented. This is just a very good possibility. So that's it, guys. I'm remaining extremely bullish on Rivian, especially with all their latest moves, with their management just performing so well. If you guys have any questions, or if you guys want to discuss the Rivian, please let me know in the comment section. Guys, like, subscribe, and share, and as always, have a great day.